Okay, good evening. My name is Rachel Stupid-Sad, and I am the current president of Elephant Artist Relief Society, or AIR, as our friends call us. And I would like to begin tonight in the spirit of respect, reciprocity, and truth by honoring and acknowledging Mohkinstsis and the traditional Treaty 7 territory and oral practices of the Blackfoot Confederacy, Siksika, Kainai, Piikani, as well as the Eyaksi Nakota and Tsuut'ina nations. Elephant Artist Society acknowledges that this territory is home to the Métis Nation of Alberta, Region 3, within the historical Northwest Métis homeland. Finally, we acknowledge all nations, Indigenous and non, who live, work, and play on this land, and who honor and celebrate this territory. We are truly grateful for the opportunity to engage in and demonstrate leadership in reconciliation. Thank you all for joining us tonight on the lands of Treaty 7 territory for this umbrella talk. On behalf of the AIR leadership team, I would like to welcome every one of you. We're grateful to each of you for choosing to spend your evening with us. Thank you for being here. This year, AIR will celebrate 15 years of service to the local arts community. Our mission has always remained the same: to provide practical resources to help sustain the livelihood and practice of artists in the Calgary area. To achieve this, AIR offers monthly professional and personal development talks, such as this, bi-weekly online artist meetup group, a wide variety of community resource information, and our core program of emergency financial relief for artists who are in crisis. AIR relies on volunteers, membership, and donations to keep doing this work. Please consider if you can help in any of those areas and visit our website to contribute. Also, please be sure to tell your family, friends, and colleagues about us. And there's just one last bit of housekeeping. Throughout the presentation, we ask that you please keep your mics on mute so there's minimal interference. And while the presentation is happening, feel free to use the chat box to put your questions, to write your questions as they come up. We will record those and be able to put them up when the Q&A period starts. And now I will pass you on to your host for the evening to introduce tonight's presentation and our guest speakers. Thank you.
Hello, everybody. My name is Margot Armstrong. Some of you may know me as Jill, but please call me Margot. I'm introducing our speakers for tonight. We have a couple of accountants from BDO. We have Yasmin Huck and Cindy Wang. They did a presentation for us last year, and they were so great and generous and informative that we asked them to come back and do it for us again this year. So I will read you a little bit about them before I pass it over to them. Hang on, where is that page? There it is. Yasmin Huck has over 18 years of experience in public accounting, and as a senior manager is responsible for all aspects of file completion, including audit planning, financial statement preparation, note preparations and disclosure, and detailed file review. Her areas of specialization include not-for-profits, charities, and foundations. So information that they have, this is quite specialized what they deal with, very specific to what a lot of your issues would be as well. Cindy Wang is a senior manager at BDO. She has over 12 years of experience in public accounting, and her areas of specialization include charities, foundations, not-for-profits, and membership-based organizations. Along with the audit clients, Cindy also manages owner-managed business clients with their bookkeeping, corporate, and personal taxes. So each of them will be speaking for approximately 30 to 35 minutes. And while they're speaking, feel free to write questions in the chat. And the chat will be monitored by Rachel. And then later, after their presentations are finished, we'll take a short break. And during that break, Rachel will provide a feedback form for everybody to respond to. And if you could respond and send it back within, how many minutes would you say, Rachel? Like maybe 10 minutes?
Oh no, it will take literally three to 4 minutes.
Okay, well, let's say they'll take a 5-minute break. If you could do it within that time and send it off, that would be great. And then we will do Q&A when we come back from the break. Okay, so without further ado, I will pass you over to Yasmin Huck.
Good evening, everybody. I'm glad that there's so many people here. As somebody mentioned, we are in the fun season of tax time, and I hope everybody can see this full. Hopefully I shared the right screen. We practice this, but you never know what happens.
It is fun.
Okay, great. Thank you. So if you had, like was mentioned before, if you have questions during it, put it in the chat. And if there's some more complex questions that need to be answered, Cindy, and we also have Julia Tan with us. She will be monitored if she has to do any research that maybe for some of the more difficult questions. We will get that information for you, and she'll be doing that behind the scenes before we get to the Q&A. If you can't hear me, let me know. If I'm talking too fast, let me know. Even though, as you heard in my bio, I do a lot of audits, I do some personal tax and some corporate tax. But if I start speeding up, I don't know, it seems like I'm excited about tax, but like some of the comments in the chat, I'm not super excited about tax. So these are some of the things we're going to cover. We're going to look at what really is income, what can you deduct, what CRA is okay with you deducting, document retention, how many years, what should you keep, how to track the info, some helpful things there. You've missed a few years, you need to do potentially file a couple of years of tax returns. How is that? You're being audited, some little tips on that. Small word on GST, and then there's some COVID tax information updates. Luckily, it's not as confusing as it potentially was last year, but there are a couple updates that they've made. Just gonna try, there we go. So what is income? So short answers and easy questions. Did you sell something? Did you get paid to make something? Did you provide a service to somebody? Did you exchange something of value, work materials, for something else of value? What we're not covering today is kind of employment income, investment income, those other non-artistic businesses. But those are the easy questions to ask yourself. Did you sell something to somebody? Did you get paid for something? You got money in for doing those type of things that you're in your business to do. Sorry, I'm just making sure my slides are not all out of order. So all money received or receivable. If you're the owner of something and you've sold it to somebody else, then you should report that income. even if you haven't been paid. So CRA has this, they do everything on an accrual basis. That means you did sell it before the end of the year, before the end of the calendar year, December 31st, but the person you've sold it to hasn't, paid you yet. You still need to record that as income on your self-employment income report, which is a T2125. We're going to have a picture of it, but it is a form in it's one of the tax forms that you would be filling out with all of your information on it. Some people may issue you a T4A. It sounds like a T4 and it kind of looks exactly like a T4. Some clients may put your, a lump sum payment or a commission or potentially, some type of grants or educational assistant payments on a T4A. That you're going to include as part of your T2125. And I'll show that on the next screen. And your grants, like I said, are normally included in income. So if you get a grant for something, you should include that on your form. So hopefully this is big enough, potentially. So this is the statement of business or professional activities. So this, you're going to put, your name, your social insurance number, and your industry code is kind of one of the important things. It's what are you doing? What is your business doing? And possible codes for those of you in this industry. These are the industry codes. It's a 6-digit code. And you can look these up online. CRA's website is also a good place to find this information, but your industry code is something important there so they know what you're doing as an artist. So now, what can you deduct? So expenses of things that you've paid for in order to run your business. So simple examples: supplies and materials, studio or equipment rent, your space rent if you're renting a space outside of your home, advertising or promotion, I guess I mentioned supplies that you need to do your business. And they kind of should have a legitimate connection to you earning income. We'll get into some of the examples of expenses that CRA is a little wavery on, but as long as they're related to what you're doing to earn income, it should be a valid expense. Here's the less clear-cut things. So travel and mileage, CRA would like you to keep a log. Now, there are some really good apps nowadays that you can track where you're traveling to for your business. If you're traveling to a client to have a meeting about, a project that you're going to do, keep a log. And if you don't like the apps and you like to have a paper logbook, any journal that you have, as long as you mark the date, where you're going, and mark the kilometers for you to get there. That's also a good way to do it. So keep a log of your mileage. Meals and entertainment, 50% if it's eligible. Now, again, you need to be either meeting with a client, has to be meals for, directly related to you earning income. It's probably a good rule of thumb. If you've decided to take your significant other for an anniversary dinner, they may not think that's legit. Something with a lot of alcohol on it, also, they may not find to be a legitimate business expense. So meals and entertainment is something to always be careful of. Make sure, one, you're keeping your receipts, even if you write on the receipt who you're meeting with. And you could prove to CRA at that point, they're a client. I have an invoice, to this client, and I met with them and we had lunch, right? And I'm deducting this expense. And so 50% of that would only be eligible if it's a legitimate business expense. So those are two to keep an eye on, because CRA is going to want backup. If your meals and entertainment are really high, it's a red flag. You know, you can claim some, just make sure that it's legitimate business expenses. So some of you may get a direct reimbursement versus an allowance for any type of, you know, daily expenses that you may have if you're on a project. So if you get an allowance, you include it in income, and then you deduct your actual expenses that you had. So if they've paid you for, you know, a meal expense, things like that, you get an allowance. So you're going to record that as income. And when I'm like up here, this is when, you know, the schedule, that T2125 schedule, it's usually income is first and then expenses are at the bottom. So this is why I'm making these hand gestures. But you included income and then deduct your actual expenses. If you're getting a direct reimbursement, that is, you're putting in an expense report to your client for, you know, your sundry bills, mileage, those type of things, then you don't need to report that. The client, you're going to produce an expense report with your receipts attached. You're going to provide that to the client, and then the client's going to write you a check for that. It's a wash. You're not reporting any of that income or any of those expenses on your schedule of business income. So we'll get into the business use of home. Cindy's going to have an update on some of the COVID stuff, but business use of home, you do have to be able to prove again to CRA that this, if you have a studio in your house, this is where you're doing the principal portion of your business. And there's an income tax folio, that's the number, business use of home expenses. Even if you go on the CRA website and type that business use of home expenses in, it'll come up with a lot of documents that you can click into to figure out the calculation. But generally, it's the square footage that your studio is in your house as a proportion of the rest of the house. And then your expenses like electricity or potentially internet, depending on what you're doing, you know, telephone. A lot of people don't have telephones anymore, landlines anymore, but then that proportion of your studio to your house would be applied to those expenses, and that portion you can deduct on as an expense. Some things that are rarely or never deductible, clothing, like I said, liquor is a big thing, and then personal expenses. So personal expenses, like you went to Safeway and bought your groceries for the week, that type of thing. Living expenses, again, there's a calculation you can do for the portion of your studio or your workspace that is in your home and get some deduction for that. But your regular gas, like I said, Safeway bill, clothing purchases, things like that won't be deductible unless you can prove it's for the business. So clothing could potentially be for those that are in the fashion industry. If you've purchased something for a photo shoot, or you're into this sustainable fashion, you know, all these vintage clothing markets that you see now, that would more be a legitimate business expense because you're buying clothes to sell clothes. Okay. Adjustments and timing businesses or timing differences. So like I mentioned before, business income is reported on an accrual basis. So that's an accounting term. So you report revenue when the work is done, not when you've been paid. So like I said, if everybody's doing it on a calendar year end, and the year end is December 31st. If you have sent out invoices and finished work and provided your clients with those items, and you're just waiting for payment, but they don't pay you till January, even if it's January 1st, you're still recording that income in your 2021. So if they pay you January 1st, 2022, but you finished everything and invoiced them December 31st, 2021, that's income in your 2021. And then you're also reporting the expenses as you've incurred them, not when you've paid them. So again, the same thing. If you ordered supplies on December 31st, but you haven't paid or received them until January 1st, you can record that as an expense in the 2021. Suppose you have losses. So in some cases, you can deduct other sources of income and offset it against your employment income. If you also have employment income. Offset around other sources not allowed if there's little expectation of future profit. So CRA does want you to eventually make some money. So if it looks to CRA like you're just a hobbyist, this isn't, something that you were looking forward to making it big and making some money out of this, they're going to question whether this is really a business. And so you want to show them that you have a little bit of expectation of future profits. And then alternatively, losses can be carried forward and back and deducted from future or past income. So if you had a really good year in 2020 and 2021 wasn't that awesome, you could carry back your losses in 2021 to 2020 to recover any taxes that you had potentially paid in that 2020 year. So there's the ability to move your losses around to recover taxes, future taxes that you may pay or previous taxes that you have paid. And like I said, a reasonable expectation of profit is what CRA is looking for. Documentation. So you should keep copies of your invoices and receipts that you issued. I'm still from the old school. There used to be receipt books that had 3 copies and there were carbon copies, and they do that. Now with the electronic, QuickBooks programs or a Sage program, you can have copies of your invoices, even if you're doing them in Word or Excel. Keep a copy of those individual invoices for your revenue. Make sure you have copies of your bank statements to show deposits that are potentially matching those invoices. A good idea to have is a separate bank account. And I know it's difficult. I know it's expensive. There are, lower fee accounts, but if that is too expensive and you only have one bank account, that's fine. But you have to be able to show CRA that certain deposits into those accounts are your self-employed artistic income. If you did get audited and you had one bank account and didn't have any invoices or copies of your receipts, CRA could potentially be like, everything that's been deposited into your account is income. And if, let's say you got some money you needed some money from a friend and they've deposited money in your bank account, unless you can prove to CRA that's not business income, they could include that if you are audited. So keep copies of your invoices, keep copies of your bank statements. And then a good thing to do if you do have 2 accounts is transfer any of your surplus in your business account to your personal living account as available and needed. And then you can move your money around, investments, but you're trying to keep everything separate. But again, if there's an expense related to having two bank accounts, multiple bank accounts. So keep good records of the revenue that you're bringing in. And then it's the same thing for expenses. Copies of your receipts, bank statements. Try to avoid paying things in cash. I know now in this time it's everything is tapped. There's not a lot of cash, but I mean, some people that's how they budget. They're paying in cash. So try to, as much as you can, not pay for things in cash. But if you are, get a receipt for what you're paying for in cash and the mileage logs. And also a note, your invoices and your receipts need to be legible. So if you get a receipt from somebody or a store and the ink is faded, it's sometimes really good to right away write on it what it is, just in case that fades. But some of those, the shiny paper receipts that you get out of the tills or the credit card machines, sometimes they do fade very quickly. So make sure you're protecting those receipts, because they are important if CRA does come a knocking. See, I'm just looking at my notes. And for your credit card statements, if you're paying for a lot of things with your credit cards, you should still get the actual receipt. Credit card statement is good, but the receipt will actually show the detail. And if you're going to claim something like a meal with a client, CRA is going to want to see the detail on that receipt. Like I've mentioned, the liquor thing is something that they don't like, they frown upon. So if there's an excessive amount of liquor on that bill, they may want to they want to see if it's a fairly high meals and entertainment expense. Record keeping. So a lot of things are going electronic now. If you're still keeping manual records, that's still good. We just want to stress that you need to keep records. CRAs could potentially come. You need to support all of your revenue and your expenses with those receipts. And you can easily, either on paper or an Excel spreadsheet, total up your revenue with the backup that you have, total up your expenses, the backup that you have, and those numbers should agree to the schedule, that T2125 that you're going to submit to CRA. Because if CRA does come back, you're like, I've got this pretty little Excel sheet and I've got all my receipts behind it. So it makes their job easy. And I'm not trying to make CRA to be the bad guy here. We all know that they're trying to do, they have a job to do to make sure everything's checks and balances are good. If you have everything, there's nothing to worry about. If you get picked randomly for an audit, don't be scared, because if you've got everything, you just slide it over to that person. They do their job really quick, you make their job really easy, and they're on their way. So keep a schedule. Like I said, if it's manual in a journal, or you can use electronic means. For those of you that have potentially bigger businesses, there are programs like QuickBooks. Julia, I mentioned, our coworker, she does a lot of bookkeeping. She is our QuickBooks expert in our office. QuickBooks is an easy program to use because everything comes up like your daily life. If you have to write a check to somebody, the thing where you're recording your expenses looks like a check, and you follow exactly all the data that's in the check, and it could potentially put it to the right expense category. There's a little bit of things you have to do, but QuickBooks is easy to use because you don't need to know what a debit and a credit is. The other one I mentioned was Sage. That one's a little more involved. You kind of do need to know what a debit and a credit is. So a lot of accountants use that. A lot of bigger businesses use that. A lot of mom and pop shops do use the QuickBooks software, but it's only useful if you're going to be doing a lot of transactions and to help you track things. And now with the online version of QuickBooks, you can attach PDFs or copies of your invoices to your transactions. So for ease of record keeping, if you are getting a lot of things by email, invoices by email, it's an easy, I think, Julia could correct me, drag and drop into the QuickBooks Online program for your record keeping. Time for retention of these records. So you should be keeping support for your tax returns for 6 years after the date of your notice of assessment. Normally, it's about 7 years. And it's the same for electronic records. You need to keep them for 6 years because CRA could go back that many years. So back to the receipts. See, you must be able to identify the items that make up the totals that you're putting on your what's the word I'm looking for, form that you're submitting to CRA. Make sure that you're agreeing the summaries of the expenses of revenue to either your banking records or the schedules that you're keeping to help reduce the errors. And if you do need to engage an accountant to prepare your taxes, that's also one, deductible, and two, it's good if your business is growing to maybe get ahead of some of these tax issues that you could potentially have. Not filing your tax returns. So if you have no taxes owing, the consequences are not too severe. So you might lose out CPP entitlement, but you're not going to have penalties assessed if you weren't owing any taxes. But if you were owing taxes and your returns weren't filed, or your returns were filed but incomplete, income was reported, there's potentially interest and penalties on that. So if you're a sole proprietor, you have your own business without a set year end, your tax return or your T1, but your personal tax return is due June 15th. So CRA does have a voluntary disclosure process. So let's say you haven't filed your taxes in 5 years. Go get some advice, go to an accountant, because it's going to be helpful. They can get you organized. You're going to know, potentially they could do a pre-calculation to see if you do owe so that you're not surprised. Contact CRA before they contact you. You could negotiate with CRA if you're like, I'm voluntarily disclosing because you guys didn't catch me, because you're going to start earning income. There could be a process you could negotiate potentially with CRA on those penalties if you were to complete everything. And you can't pick and choose the years. So if you haven't filed since, let's pretend 2018, you can't just go in and say, well, I'm going to file 19 and 20, but I'm not going to file 18. You would need to file not all returns, but they're going to go back a certain number of years. I've heard about 10. Sometimes it's just 5 or 6, but you can't just pick and choose what years that you've missed that you're going to file. CRA audit, like I said, I'm not making them to be the bad guy. You got good records. If you've got things organized, even if you have everything organized, you put a Post-it, you've added everything, these receipts together, these receipts are your supplies, these receipts are your meals and entertainment. You put a paper clip on them, you put them in a shoebox, you protect that shoebox, you still have those documents. So they're still organized, they're in a shoebox, you're keeping them safe. If that's what you have and that's what works for you, when CRA does come a knocking, you can just provide them the shoebox, right? So just make sure you have good records, that you're able to support your expenses that you're deducting. Keep copy of any original documents given to the auditor. So this one is a little different. Any important documents, try to make a copy for your auditor. Your notice assessment, any T-slips, make sure you're keeping a copy for yourself. Not everybody wants to make copies of every little receipt that you have, but important things, keep a copy for yourself before you give to the CRA auditor. Again, if you're unsure about anything, get some professional advice before your audit begins, and watch the time limits on filing objections and appeals. This thing is, if CRA sends you a letter, you only have, it takes now it's like 2 or 3 days, sometimes it's 5 days, but still the deadline is from the date of that letter. They give you either 60 days or 90 days from the date of the letter. So if you ignore the letter and then you come up to the last week that you're allowed to file an objection or anything, it's going to be difficult. Try to deal with those things up front. We all don't like dealing with potentially bad news at the beginning, but if you rip it off like a Band-Aid and deal with it, there's no rushing at the end. You're not trying to figure things out. And CRA wants to get these things done as quickly as you do. So try to pay attention to those dates of those letters. GST. So GST is one of those fun things. If your self-employed revenue is going to exceed $30,000, grant income from governments is not subject to GST. You should be collecting and you should be keeping track of the GST, charging it on your revenue, and then you can offset it with any GST that you've paid out on your expenses. There's some shortcut calculation methods. They're not super complicated, but they are on the CRA website. But essentially, if your revenue is going to exceed $30,000 in a year, you should be collecting GST from your clients or charging GST to your clients, and then you can offset that with the GST that you're paying out. So that is my part. Now we're going to move on to Cindy's fun part, and I may have talked for a little too long, but that's okay. Cindy?
Yes, thanks, Yasmin. Hello, everyone. My name is Cindy Wang. I'm very happy to be here. So I'm gonna carry on with what's new for 2021 T1 personal tax returns. These are all, a lot of them are related to COVID. We know COVID is not fun, and my part is probably not that fun either, and it's going to be a little dry. And there aren't a lot of personal tax changes this year. So most of the changes are related to COVID, subsidies, and expenses. And I know these abbreviations look pretty daunting. I cannot avoid jargons unless CRA choose not to use them, but I'll try my best to explain them in plain language. I'll take time to answer questions if I don't explain myself clear in my presentation. So there are many COVID benefits offered by the federal government in 2021, and the most prominent ones are listed here, including 3 recovery benefits and the new Canada Worker Lockdown benefit. So all of these benefits are taxable if you happen to receive some. And there was 10% tax withheld on the payments, which will be reported on the T4A slips that CRA would have sent out. Now, benefit repayment is something to keep in mind when you prepare your returns. If a repayment was made in 2021, let's say you repaid some for a benefit that you weren't supposed to get, then CRA has said that repayment would have been recorded in the T-slips, and you can claim a deduction for the time when you paid it back. Okay, so next slide. So you may have received the COVID benefits from the provinces you resident, where the payments were taxable and the amounts need to be included on T1. So if you don't receive a T-slip for these subsidies from the provinces, it would be reported on, there's a specific line item on your tax return. The line number is 13,000 of your T1, just like the federal benefits. That's where you put it there, because sometimes they don't give you T-slips. And one last change is the climate action incentive. So that incentive for residents of some provinces, including Alberta, will no longer under the refundable tax credit on the T1. So in previous years, this incentive is reported as a credit on your T1. And now with 2021, the federal government changed it to be like a child benefit, let's say. So there's nothing you need to do in order to get the credit on T1. But all you need to do is to file your tax return, and then you'll get the benefit, like the check from the government. Having said that, there's always exception. There is just one exception if you live in a small or rural communities. For example, if you don't live in a greater area of Lethbridge, Calgary, or Edmonton in Alberta, you would qualify for a 10% rural supplement for the coming year. And if this is the case, there's a box to check off on your tax return, Schedule 14. Next slide, thanks, Yes. So the next few slides, we're gonna talk about home office expense deduction for employees. And if you're not employed, you may skip this part and have a little break. This deduction was available for 2020. And the good news was that CRA has determined this type of deduction will be extended to 2021 and 2022, and will look a lot like 2020. So eligible employees will continue to have the choice between two methods, the temporary flat rate method and the detailed method. The temporary flat method is the simpler of the two methods. It provides you a $2 a day for every day that you work from home due to COVID-19, up to an increased maximum total of $500. And you don't need to track expenses, and you don't need to need forms from your employer. Now, the detailed method allows you to claim the employment used portion of actual deductible expenses paid during periods that you worked from home. In order to do that, you need to track your expense and keep receipts. Like Yas just talked. You also need to get a signed form, which is called T2200S from your employer. The T2200S was new shortened form introduced last year for employers to use for employees who only worked from home because of the pandemic. Now, if the employee is claiming any other employment expenses or was already required to work from home before pandemic, then they would need the traditional T2200 from their employer. Moving on to next slide. CRA has confirmed the eligibility requirement for the temporary flat method for 2021 are the same as 2020. So you must have worked from home in 2021 because of COVID. If you weren't required to work from home, but chose to work from home during the pandemic, you would still meet the requirement. Same as the 2020, you must have worked more than 50% of time from home for at least 4 consecutive weeks in 2021. And you cannot claim any other employment expenses, and you were not reimbursed for all of your expenses by your employer. Next, yeah, the deduction is $2 a day for every day you worked from home, and is capped for $500 or 250 working days from home. So you need to keep in mind that vacation days, sick days, holidays, you don't count as working from home. but it does include both full-time and part-time days work from home. For the average office employees who work from Monday to Friday, there are about 250 work days in a year. So even if you work from home for all of your 2021, you would only be claiming the maximum $500 if you took no days off in a year. So it's not very likely that you will get the maximum deduction there. Next slide. So moving on to the eligibility requirement for using the detailed method. So we just talked the temporary method, and now we're on the detailed method. And again, this remains unchanged from 2020. So I have underlined the slide that are required, that are requirements that were brought in light of pandemic, and they were the same as temporary flat rate method, except that you need T2200 or T2200S, that form, from your employer to use this method. Next. So this is a visual summary of what you need to calculate your home office expenses deduction under the detailed method. For those of you who are not an employee and you are still sticking around and paying attention, this process would apply to you for you to claim your business use of home office. So once you confirm that you're eligible to use this method, you would need to determine the square footage of your workspace as a proportion of your home. If you work in a common space such as dining room table, you would need to calculate the hours of the week that you work in that space out of the total 160 hours in a week. The 2% the 2% applied together when you have the percentage calculated out and give your employment use percentage. So you would then apply these percentages to your total deductible workspace expenses, such as rent, utility paid during the period that you work from home. And you pay, if you paid for supplies such as paper, printer, ink, or something, they can be deducted without the need to prorate. I will list some of the common deductible expenses in the notes when we send out the slides. I'll also add a link that to the CRA website where they maintain a comprehensive list of deductible expenses for your reference later. So many of you may already know which method works best for you based off your 2020 claim, if you did have the claim. But if your worker home situation changed in 2021, it could be worthwhile to compare the two methods. Generally, people who can get a higher deduction using the detailed method are usually individuals to rent their homes and have those large deductible expenses such as rent and utilities. And on the slide, there is a quick example to compare the two methods. I'm not gonna going through the calculation here to confuse you, but you're more than welcome to raise questions later if you would like me to go through. CRA also has an online calculator that you can use as well. Next slide. Okay. You would need to claim your home office expenses on T777S, which is a simplified form for employees who worked from home because of COVID-19. So this form can be used for either the temporary flat rate method or the detailed method when preparing your T1s. But if you are claiming other employment expenses such as automobile expenses, you would need to complete the full T777 form. That is that is all about the home expenses deduction as an employee, as well as wrapping up all the changes for employees for 2021 T1s. Okay, so the last but not the least slide listed out all the key federal COVID-19 incentive or subsidies. these are generally for a corporation or a sole proprietor or a charity or non-for-profit. So as a sole proprietor, you will need to report these on your T1s if you ever get one. So for corporations, if you ever incorporated your business, these would be reported on your T2, which is the corporate tax returns. So I think people are likely familiar at least with one or a few of those programs. All of these incentives are taxable to the recipient entities. The upper part, like the upper row, shows the program that started in 2020. And the lower part shows the new program started in 2021. So all of the upper ones are discontinued, except for the temporary wage subsidy, the TWS. But it is related to March, from March to June 2020. So if your business qualifies and you have not claimed yet, you can still claim for that specific period. Now, with the discontinuance of the old ones, the government has announced more targeted programs, which is listed on the bottom part. I think the lack of targeting has been one of the criticism. These so-called new programs are basically the extension of the wages and rent subsidies with more targeted industry and organizations. So to obtain the subsidies, you would pass the eligibility testing. Particularly, there would be some revenue drop percentage. I would say 10% and more, and you would have to pay the wages as well. So that's another threshold. So all of these new programs are very hard to achieve, actually, from what we've seen, because of the very tightened eligibility criteria. And the calculation is rather very complicated. If you think you qualify, you go through the website and CRA. I would encourage you to talk to your accountants or us if you have specific questions or you need assistance in applying these programs. I think that's all the part for me. So I saved a few minutes there. And this is just the resources we listed out for you to check out. And I tried those links, I think they work. Another good resource would be CRA's website. They always have great material there. That is all for me.
Okay, well, thank you so much, Cindy and Yasmin. Just like last year, you're very generous. So I guess right now we'll give you two a break. Go have something to drink or whatever refuels you a little bit. And we're going to drop Rachel just dropped a feedback form into the chat. So if everybody could take the time to open that up and answer it, that would really help us. It helps us anytime we can pull feedback in from our audience or our membership or whoever we can reach. It really helps us determine what we do. So if you could take the time to do that, that would be great. And we will start the Q&A session at approximately 8 o'clock. So we'll talk to you in a few minutes. I think people are starting to put more questions into the chat. So I think everybody must be finished their feedback forms. So let's pile in there. We got Cindy and Yasmin back, okay, and everybody's finished their forms. So how shall we proceed here?
I'm happy to share my screen with the questions that I've got so far from the chat.
That would be a good place to start. Thanks, Rachel. Okay. Yes, this is a really good one to start with. A lot of us do this. The first question is, what do you do if you have multiple industry streams of income?
So for this one, normally you would report on different business forms like the T2125 Yas mentioned. You would complete 4 because, sorry, you would complete different ones because each of the income source would have their own sort of expenses to claim and their own set of equipment or related expenses. So we would expect you to report them on different forms, multiple forms, I mean.
So that form you just named, you would fill out a separate one for each industry you're working in?
Yeah.
Okay.
Yeah, exactly.
Good to know. Okay. The next question, when recording a grant, do you just record the income you were personally getting from the grant, or do you have to record the entire grant, including what you're paying others from the grant? Very common question, very important.
Yeah, I guess this depends on your grant agreement. So if that grant is specifically to you and under that grant, you are allowed to pay other participants, then you would report the entire grant under your name. And then from there, you would record expenses as you pay out to other participants. But if all of your names are showing on the grant agreements, then you would, share the grant and proportionally. But I mean, bottom line, like CRA is not going to go hard on this. Like even if you, go either way, as long as you keep the sufficient documents and you can show them why you're doing this way, they'll get it.
Okay, good. Thanks, Cindy. That's helpful. Okay, here's an interesting one. Would a sub bank account be okay to use as a business account? I imagine that means like a sub account to maybe a personal account as opposed to a bank business account.
Yeah, I think as a sole proprietor, it doesn't matter if a personal versus business. I mean, as long as you keep track of your payments, like even if, I mean, I get it, sometimes people, mingle expenses or payments together in one account even, but as long as you keep track of what are business and versus personal, you'll be fine. So to answer this question, I think it's yes.
Okay. What app do you use for taxes and for organizing the documentation? There's probably more than one, right?
So yeah, I guess I want to get some clarification on this question. Like, are you asking for the program to file your personal tax, or are you asking like sort of like a bookkeeping program to keep your expenses, revenues like organized? So they are different programs.
Oh, okay. Somebody just threw it says for a bookkeeping program. Was it Almendra that asked that question?
Yes.
Okay, is that what you meant?
Yeah.
Okay, does that help, Cindy?
Yeah. I mean, for bookkeeping programs, like depending on your size and your need, like the basic ones, like Yas mentioned, you can use the ledger books. Like that would be your, the entry level, and then Excel can do the work too if they're not too complicated. And moving on to the app, I guess QuickBook would be a good one to start with. I mean, we have a lot fancy ones on the market as well. I think Julia might be the better one to answer the questions as she's dealing most with business bookkeeping side. I don't know, Julia, if you can provide some insight now, or maybe we can circle back later about the questions.
So as you said, depends on your needs and all your reporting requirements, and also your budget and the accounting software. There's many factors for you to choose the right one. So as mentioned, QuickBooks Online version, QuickBooks Desktop version, and Sage, and the Zero. There are so many right now on the market for you to choose. But if you do have a specific needs regarding choosing a software, please reach out to us. We can get back to you.
Okay,
Yeah,
I was, oh, sorry, go ahead.
Oh no, I was gonna say from my experience, QuickBooks is the predominant ones I've seen
Okay.
for most of the clients. Yeah.
So do you think that to answer a question like that, because it sounds like it's very specific depending on what you're doing, would it be a good idea for an artist to speak to an accountant and ask, like lay out what they're doing and their situation and say, which would you recommend?
Yeah, exactly. Talk to your accountants or ask if you don't know anyone. We can help you. Like it's the most important one is know what you're doing. Like you said, your need, and then the level of confidence you have in your bookkeeping skills.
Okay.
Yeah, if you and it does come down to cost. Cost is an understandable thing. So QuickBooks Online does have the online version has a monthly subscription, I think, Julia, where you can get help with things. The desktop one is there is an upfront fee for getting the software, and then potentially if you need software help, there's additional packages. So I think you think about the number of transactions you have during the month. I don't know if Julia can think of a number, but if you're only got like 10 transactions a month, then maybe going to an accounting program is not cost effective for you. Maybe just using Excel is still a good way to go. We still have clients, young clients starting out, even our older clients who don't like technology, they still just use Excel, or like Cindy mentioned, ledgers, paper. They're writing things on paper, or they're using Excel because that's what they know how to use. You don't want to get too complicated with it. I think my best advice, and Julia may agree with this, that the accounting programs, like I mentioned before, Sage, you need to know what a debit and a credit is. QuickBooks, it kind of looks like your daily banking, right? But it's still easy for you to accidentally do something wrong. I believe there is some knowledge that you need behind of what happens behind the program, that you're not just pressing a button magically does it, right? So think about the number of transactions you have in 1 month. If it's minimal and you're able to track it with an Excel spreadsheet and keeping your receipts, that's perfectly fine. With regards to like an app, I haven't had any clients come in with that yet. I may ask some of our more front-facing staff, the ones that are potentially doing more personal tax returns, to see if they have seen an app that people are been using or they are recommending. So we can always circle back with that, but it is, think about the number of transactions you have in a month.
Okay.
Yes.
It's about ease, because if it's too hard for you to do, you don't want to do it.
Okay.
That's a good rule of thumb.
Okay, good to know. Was Julia trying to say something else there too? No?
I was going to say QuickBooks Online, the essential version is only $25 per month. And also people think that you don't need that much accounting knowledge to get your books set up. So a lot of people find it's very easy to use and to learn, but Sage kind of a little bit more complicated. You might need someone has the knowledge to get your book set up properly. And then, but as Yas and Sandy said, talk to your accountant and find out your needs. And also if you need help from us, you're always welcome. And then reach out to us. We can definitely provide more kind suggestion or support.
Okay, great. Thanks for that clarification, Julia. Next question. Oh, this is a good one. Can you take pictures of the receipts or do you need to keep originals?
So the short answer is yes. And I just shared a link in the chat, and which will give you a bit more detailed explanation on this. So CRA actually, they accept the digital version of the receipts, but there are some requirements that, at least they need to be readable, all that kind of stuff. And once you have them stored digitally, and you can, get rid of the original receipts.
Okay, great. Okay, and then wondering if there are two self-employment industries I'm claiming, e.g. counseling and visual art, working out of the same studio office space. I decided to go ahead and read this one because it might be different than the one you answered previously, because it's like two different industries. There's the art and counseling. I don't know if it applies to that same question you answered before.
Yeah. So you wouldn't need two 2125 forms to claim.
Okay, so it is the same thing then. It's just you need two of those forms, the 2125. That's what it's called.
Yeah, because you need to put in your industry code there, unless they're related, counseling for visual arts as well. You can claim on one, but if there are different things, you put on them too. But I guess you might have questions regarding how to claim the office, home office, that you can just split them up. I mean, let's say you come up with $1,000 of home office expenses. You can prorate that according to your revenue or the time you spend for each revenue streams to claim that expenses.
Okay, so there's a lot of variables. Interesting. Okay. I think Rachel is just providing some more questions in just a second. So let me just look here.
That's what I got from when the presentation was happening.
Okay.
And there are now more questions in the chat box.
Okay, I'm just looking for where that left off.
I think
at 8:09.
Yeah.
Okay, let's see. Thanks, Rachel.
Colleen Roche's question is the first one after the break.
Wait, there was another one here. Tyler Longmires. Should a self-employed artist who works from home regularly try to claim COVID work from home stuff, or just claim home office expenses as normal?
I depends on, I mean, if you're not employed, there's no difference for you to claim the home office. Unless you are an employee, you can claim COVID related, like it's the home office is allowed under COVID only for employees. But if you are self-employed, there's no difference for you before and after COVID, or during, I mean.
Thank you.
Okay, good. And Karen, I saw this question just before we went to the break. Karen said, could one of our guests chat about vehicle expenses, qualifications, tracking, etc.?
Yeah, this is an interesting one. So if you are using, so there are different ways to claim the vehicle expenses. You can claim actual expenses. Let's say you paid your gas bill, you did some repair and maintenance to your car, and you pay your monthly mortgage, all that. Those are actual bills. You can go by actual.
Okay.
Only if you use that vehicle more than 90% for your business.
Okay.
Because otherwise you'll kind of in the loophole that there's going to be taxable benefits, or that you claim something you were not 100% for the business. There's another way to do that, is just the keeping log, as Yas just mentioned, because that's easy to go. Like CRA provide a reasonable rates per kilometer, and you just use that rate and times your kilometers used for business and call it a day. Because when you get into the actual claim, it's kind of complicated, because there's, what about the cost for the vehicle, like the down payment and the mortgage, all that, and then you get into the, the kind of gray areas CCA, what we call like a depreciation for the vehicles, because the car kind of devalues from year to year. That's kind of your cost as well. So that's more complicated along that line. So there are different ways. I would recommend the easier way, which is keeping the log, especially when you're not using the vehicle more than 90% for your business.
Okay, sounds good.
Thank you.
There's
Sorry.
another- oh,
Thank you.
yeah.
Thank you, Cindy. Can I pay myself 35 cents per kilometer?
So the reasonable rate, it's changing from year to year. And for 2021, I think it's 61 cents per kilometers. And it's actually higher than what you just said.
Oh,
And yeah. So, 61 cents per kilometer for the first 5,000 kilometers. And if it's over that, I think it's reduced to 59 for the remaining kilometers per yeah.
Pretty substantial. That's cool.
Mhm.
Okay, now there's another question that came up in the chat right after the one about the vehicle expenses, and I'm assuming it is referring to that. And it says, would you still do that as a sole proprietor?
Sorry, so that was in reference to the multiple industry stream codes.
Oh, okay.
So
Okay.
if you registered as a sole proprietor, would you still need to file with the individual streams on that?
Yeah.
So I guess the question is, are all your business were done under that, using that one sole proprietor kind of code there? Like, sorry if I didn't quite get your question.
So for example, I'm a musician, I'm an actor, I do video, I do recording, I do live shows.
Mhm.
So realistically, they are different codes, but they're all under like a media umbrella. So would I still need to file all of those as individual things, or would that all be under?
No, it'll be all under the one. I mean, if they're related, let's say, for example, I think someone just mentioned if it's a counseling versus artist, they're totally different.
Yeah.
Then we claim them on separate ones. But the one you just brought up, you can totally claim them on one form.
Because it's all artist. They're all under the umbrella of artist, I would say. Yeah.
Yeah.
Thank you for clarifying that, Rome. It's great. Thank you. Okay, and what's the next one? Oh, somebody's asking for we already talked about that. Oh, if you are an artist, this is a basic one, but it's good. If you are an artist, do you need to register as a sole proprietor to be considered a business to be able to write off expenses?
I think that's another area, kind of like legal, because some type of business or industry you need license to do. For example, like a bakery, all that. And you need business license to do that, or you need to have your business name, operating name, then yes, go ahead, do that. But if you are just doing some, just to start out your business, I don't think you necessarily need to register for that. There are just different type of registration, with the Alberta corporate registry, and as well as CRA, which is the Canada Revenue Agency. There are two different departments and two different systems. I don't know if I answered the questions, but.
So I don't know if you have to register as a sole proprietor. I think you're considered a sole proprietor if you're not an incorporated business, right, Cindy?
There is a registration for sole proprietor if you want to use your or like, let's say you want to use this name for your business. Like you have a business name or operating name, you can do that, but you don't have to. But for tax returns, it's a different term for sole proprietor. Like if you're self-employed, let's say you do your own business, you're not incorporated, it's sole proprietor under the tax term, but it's different from the one you register with Alberta, say Alberta registrant. They're different concepts.
Okay, thank you.
Thank you.
Okay, do any of you have recommendations for where artists can find accountants who have knowledge or experience doing artists' taxes?
BDO.
Well, yeah.
You know, we're happy to answer questions. Like, we're not charging you if you just have general questions, if you want to know what to do. You know, when we get to the very detailed questions or tax related, which we need more time to investigate, to spend, that might be something we can talk about for future. But you know, just to start with, I'm sure we can find someone to talk with you if you need to.
Okay, thank you. All right. The T2125 does not list artist expenses. For example, camera gear, art or set design, contract actors' wages. Where would you claim these expenses?
So for contractor, there's a concept of expenses versus capital. So for the gears, you're talking about like cameras, all that kind of lasts longer, let's say 5 years or so, that they're considered capital cost. There's a very specific area you put them in, like I think it's some like bottom part of that form, and then they give you different classes for the capital asset, they call. So once you put in your costs there, they amortize that from year to year. Let's say you spend $1,000 on the camera and you're not able to claim that total, like the entire cost for 1 year, because they only allow you to claim, I don't know, like 20%, depending on which class it is. But some other expenses, they're just for this year, let's say contractor, or you pay accountant, then their general expenses, like they have the generic fields for you to fill out. I don't know, yes, do you have any insight for that? Or
yeah, as long as in your records, like if you do an Excel sheet and there isn't a specifically a line for, you know, contract wages, if there's a wages line, you could put those, you could sum those together. Your Excel spreadsheet can list them out as these are contract wages, these are, you know, regular. I do have some employees. It's not, yeah, the form, if the form had every possible thing on it, it would be giant. So it's okay to put things in similar buckets on the spreadsheet, if that makes more sense.
yeah, I
They're
think
similar.
Yeah, I think for supplies, they do have some fields for supplies or materials you can put in. But like I said, you probably need to have a concept of it's a capital cost versus a expense. Let's say, like a house or a car, they would be considered capital. Then they would put on very specific form, like a sub form of 2125. But if it's just a regular, you know, expenditures, then you can just fit them in whatever you think applies. Most of the cases, this should be self-explanatory.
Yeah, when an accountant thinks of a capital asset, we think of something that has a useful life of more than a year. So the example in there about camera gear, if your camera you think is going to last you 5 years for your business, then that would be considered a capital asset. And then, like Cindy mentioned, I'm trying to look at the form and see if I can see it on the form, but there's another space where you would put that capital asset in and the program would calculate based on what it is. CRA has classes for assets, like vehicles that are in a certain class, cameras and that type of equipment would be in a different class, and they each have their own percentage rate that you would apply to the expense. I'm trying not to be so technical, that you would apply to the expense to figure out that asset, to figure out how much of that expense is used in the year. or that asset is used in the year. So if that camera, pretend that, like she said, it's $1,000 and you're gonna use it for 5 years. So then each year you would be able to deduct $200 of the camera usage expense.
Yeah, I think your job is trying to find out if it's capital versus, non-capital. And from there, CRA will let you know. They actually have prescribed rate that you can claim. Even though you think your camera lasts 5 years, the CRA probably say you can only claim like $100 every year, and they allow you to claim for 10 years. So it is a very technical question.
Mhm.
Yeah, there is, I'm just looking at our tax program. There is a form. There's 2 forms that are kind of sub forms of that T2125. One is a capital cost allowance, which is for any of those assets that have a useful life of more than a year, like the camera. And then there is also an auto form for the person that was asking about the vehicle expenses that has the business use of the motor vehicle. So there's sub forms related to those items that you would fill out.
Okay. Thank you. Okay, next one. Alyssa Koski, you have another question here in the multiple industry streams. I just wondered if you felt that your question has been addressed, or shall we bring it up? Are you there? No? Okay. Well, it's another question in multiple industry streams. She says, would you keep art-related income expenses together if it's all involved in freelancing? For instance, I do animation, fine art, branding, etc., which is all technically different industries, but much of it overlaps. So it's just like, I don't know.
Yeah, I think so. I think as long as they're kind of related under the same kind of umbrella.
Yeah.
And you do need to fill out the industry code. I would just pick the main ones, like let's say the one weighs the most, and then kind of put the rest there as well.
Okay. Okay, thank you. Next one. She says, I think you mentioned being able to deduct only 50% of meals for meetings related to your business. But if you got a project grant from a public funder, and that grant included project expenses related to food, either food for yourself as a part of a per diem, or food for others, like food for during an event, rehearsal, or workshop, could you deduct the full amount from the grant as a project expense?
Yeah, I think so. As long as, I mean, the meals 50% the rule, as Yas mentioned, it's more for meals and entertainment for on an occasional basis, and but anything related to the business purposes, let's say you have some meals for the rehearsal for everybody, especially it's 100% deductible. And when it's prescribed by the founding agreement, especially as well, it would be 100% deductible.
Okay. Thank you. Here, 2021 is my first year as a professional artist. Can I bring consumable supplies into my business that I already have prorated if I what? Should I, oh, she wants to know if she can bring stuff she already had prorated if needed, like half a tube of paint. I know I can bring an equipment prorated.
I'm not sure what prorated means. Does that mean like some equipment you use personally as well as business, or?
Well, I guess what she means is to like just claim part of the expense if it's a half-used tube of paint as opposed to a full one.
Like okay, use the ones. Yes. I think so. the key point here is you need to keep track of all your supplies, just in case, CRA comes back, ask you, why are you claiming this on what basis? And a lot of times we ask clients, what are the fair market value of those supplies? Let's say you're going to buy those used supplies from someone else, how much you're going to pay. So sort of like on an arm's length. So you need kind of assess what is the fair market value of those, even though they're used. I understand sometimes, for example, for the cameras, like even if it's used, but when it's short on demand, it actually goes up the price, and then the fair market value is actually higher than what you paid, and that's probably the value you need to bring in for tax. So and this again, this is going to be a very technical question, like because we have tax people to help out people on this, but if it's just not too much of dollar value, I think a good estimation and tracking of your expenses would be a good idea to start with.
Okay, thank you. Tyler Longmire brought up an interesting tip here. He says, I've used Studio Tax for the past few years to do my own personal and freelance taxes. It's cheap, links up to your CRA history, has all the forms you need, looks for deductions, etc., and can submit directly to the CRA. I like it. And then he also provides a link. So you can find that in the chat at 2022. So, okay. And then I have my own art teaching business. Is it separate from my sole proprietorship as an artist? I teach outside of my home studio, which is a rented space. Can I claim home office for the teaching planning as separate from my home studio, or is it all just one sole proprietorship? Do you need that one again?
No, that's okay. Again, that kind of links back to what we said. If like, what is the weight of the income? If it's not a great portion compared to the other one, you could potentially claim them together. But if it is, especially it has its own expenses, I would claim them separately. I don't know if I answered the question. But in terms of the home expense, yes, you can prorate that based on, like I said, the time spent in the office for different business, and then just prorate them for different sources if you claim them on different forms.
Okay. For capital assets that you are financing, would you put the overall total you are financing in the year that you made the purchase, or does that financing get broken down over the financing term?
Is that sort of like the mortgage we pay monthly, and the principal plus interests? That's the finance we're asking here. If
Kind of. So for gear, for example, I think some businesses kind of look at it as a loan. So you're making monthly payments on it, but it's $5,000 worth of gear. So how do you file that? Because I'll be paying for it for like over 2 years, but
yeah, it depends on if it's a loan or a lease. If it's a loan, I think you can claim them all, like the upfront, like the total costs, and then put them as capital costs. And also you can claim the interests as well. But if it's a lease, then it's going to be based on the actual payments from period to period. I don't know if I
would you file that still under capital expenses yearly then?
If it's a lease, no, it's gonna be your expense, not capital, right?
Okay.
Yeah.
Okay, here's another comment from Tyler. This might be useful. I put my grant subsistence, food and rent deductions from an AFA grant in my other field in my T2125 losses last year, and it seemed to work. I was pretty stumped on how to claim it when the grant basically paid for me to stay alive for a period, so it wasn't income per se. I don't know.
Sorry, is that as we're trying to claim as a subsidy? I'm not sorry. I
Yeah,
did not.
more of a tip. I got this grant a couple of years ago, and most of it was just for subsistence, to just cover my costs while I worked on a project. And I was pretty stumped on how to file it because it was all pretty much a wash at the end of the day. So if you had any other tips for that, because I know it's a pretty common thing for people is to apply for subsistence grants where you don't you're not getting an artist fee, you're just kind of covering your costs for a period.
Yeah.
So if you had any tips on how to file that, I'd definitely be very grateful about that.
No, I mean, if it's related to your art business, like it's supporting your business, it's part of the business income, then that's the place to go. It's as long as you put it there as taxable income, and CRA is happy about that. They're not quite fuzzy about where you put it.
Okay. Okay, that's cool. Thanks, both of you. There's one more question I'm sort of circling back to if we had time for it. Linda remarked there was a question a while ago about cameras and related to capital costs, and she said that her mic wasn't working, so she couldn't speak out at the time. But what she was talking about was actually camera rental, not capital cost. So I think that's I thought we should bring that up again because that's probably different.
Yes, so that's again, like Rom just said, it's going to be the lease, sort of like lease and the rent, then that's the expense you can claim. Like we're not capitalizing that, it's not capital.
Okay.
Rome did have a clarification on his that he's leasing to own that camera.
Okay. Oh, so that's different again.
Still for tax, it doesn't matter if it's lease to own or not, you claim as a lease, then that's a lease. End of the day, you just claim all of the payments you made, right? So doesn't quite make a difference if you lease to own or lease.
Yeah, because I think it's the double dipping, right? They don't want you to put it on the capital assets.
Exactly.
Get that expense and then claim the lease. So it's kind of one or the other. I'd go with the lease payments because they're probably more expensive.
And more straightforward.
Okay.
Yeah.
Sure, yeah. Okay, well, that's all the questions we had actually in the chat. So now we just want to say, is there anything else? If we want to just, turn on our mics or turn on your mic if you have another question that we haven't addressed.
I think Tyler's got all the info. He should run this next year.
We'll be talking to you, Tyler.
I don't know. I've just been gigging for a while. I've picked up some tips, and honestly, I learned. I've done a couple of these workshops over the past, like through EAR, other orgs, and they've been very, very helpful. So, yeah, I just applied for my GST number this year, so I'm slowly going up, and now I have to collect that, which is a lot of fun.
Yeah, GST is another tricky part.
Yeah,
super fun.
Yeah, cool. Well, it sounds like, I don't know, it looks like we don't have any more questions. I'm sorry, Yasmin, were you trying to say something? Did I?
Oh, I was just going to say, thanks for having us. We're always happy to help people, to, give them some tips and tricks. I think group things like this where people have questions and they're not afraid to ask them are great. You guys had a lot of great questions. I'm super happy you had so many questions. If you have any comments for us or ideas or things that you would like to see if we happen to do this next year, please, let Margot know, and she'll pass that information on to us. They are going to make the formal presentation of this available on the YouTube, so you'll get a link to that. We're also going to provide the slides to Margot to distribute out. to anybody who would like them,
Yeah.
so that you had them there. But yeah, no, thank you very much. I think it was a great evening.
It was, and thank you once again for doing this, and thanks to all the guests tonight for all your great questions. I could see how engaged you were in this process. This is a really important thing. So yeah, thanks for coming. And we do have more umbrella talks coming up. Our next one in April is the World of Words, all talking to writers from various genres. And also, I need to remind you that EAR runs, especially our relief program, we run on donations and fundraising. So when you've done your taxes, if you have a return and you really, you have a little bit of it burning a hole in your pocket, don't forget about EAR, okay? So thanks so much, everybody, and have a good night, and take care out there. Good luck with your taxes.
Thank you, Margot. Thank you, Yasmin and Cindy.
Thank you, everybody.
Everyone else. for
Thanks,
coming.
everyone. This is a great community.
Thank you.
Have a
Bye.
wonderful evening, everyone.
Okay, bye-bye.